The wealth equation: earn, save, invest. Repeat Brian Tracy. From the first time you tally your income and expenses on a single sheet of paper, you step into a new reality. Picture yourself at a small desk in a sunlit room, a crisp notebook open before you. You write at the top: the wealth equation: earn, save, invest, repeat. In that moment, you're no longer drifting, you're charting a course. You begin by reflecting on your current income streams. Perhaps you run a boutique, digital agency, consult for startups, or nurture a growing e-commerce store. You list every dollar you earn in a typical month. Seeing the total call out on the page jolts you. It's more than you realized, or perhaps less. But that clarity sparks focus. You decide, this year, you will accelerate your earning power week. One is about strategy. You research high-value skills in your field: advanced marketing funnels, leadership coaching, or data analytics. You reach out to 3 mentors and carve out 30 minutes with each. They advise you to package your expertise into a premium offering: a mastermind group, an online course, a retainer service. You draft an outline for a new service tier that could double your hourly rate. By week 2, you've refined your pitch. You set meetings with 5 prospective clients or partners. In each call, you lead with value: specific case studies, clear outcomes, a compelling ROI. You feel the energy shift in the conversation when you speak with confidence. To clients sign on at your new rate, you've boosted your monthly revenue by 20%. Now comes saving. In week 3, you track every expense, categorize essentials, rent, utilities, software subscriptions, and luxuries: dining out, weekends away, impulse purchases. You identify patterns: a daily premium, coffee habit, unused streaming subscriptions, ad hoc Uber rides. You set saving targets. 10% of earnings goes instantly into a high-yield savings account. 5% to an emergency fund, 5% to a vacation fund. At the end of the first month, you look at your bank statements side by side. You're spending 20% less on non-essentials and building real cash cushions. You realize that saving isn't deprivation, it's freedom to choose. Month 2 shifts focus to investing. You educate yourself on basic principles: compound, growth, asset allocation, risk management. You read Brian Tracy's teachings on making money work for you. You open a brokerage account and set up an automatic transfer. 5% of your earnings every payday buys a diversified mix of low-cost index funds. You also earmark 3% for higher risk, higher return opportunities. Perhaps a small position in a promising startup or a real estate crowdfunding deal. You watch your investments grow, little by little. You check performance weekly but resist temptation to tweak every fluctuation. Instead, you reaffirm your long-term vision: financial independence, the ability to fund new ventures, and the peace of mind that comes from diversified wealth. In month 3, you revisit earn. You realize that while your new premium service generates more revenue, you spend too many hours on client calls. You design a group coaching program that leverages your expertise but multiplies your impact. You onboard 10 participants. Each pays a fraction of your usual one-on-one rate, yet collectively you earn more for fewer hours. Your productivity soars, and you free up time to explore fresh income channels, a niche podcast sponsorship, or a joint venture with an industry influencer. Meanwhile, your saving system has become automatic. Money moves into your accounts before you even see it. Set a quarterly review. Adjust percentages, increase transfers as income grows, and celebrate each milestone. You treat savings like paying yourself first, a non-negotiable expense. Your investment portfolio enters month 4. With steady gains, you balance your index funds with a small basket of dividend-paying stocks. Those dividends roll into a cash reinvestment account, compounding quietly in the background. You also begin self-education on real estate, listening to podcasts, attending webinars, and connecting with experienced investors. You earmark a small portion of savings to seed a future down payment. In month 5, setbacks arrive. Key client postpones a project, denting your revenue forecast. You feel the sting, your cash flow projections wobble, but you remember the wealth equation's power. You have savings to cover shortfalls, investments that cushion the impact. You dive into action. You pitch a smaller, faster turnaround service to that same client, and they agree. You preserve the relationship and fill the gap. At month 6, you perform your mid-year deep dive. You tally total earnings, total savings rate, and investment performance. You calculate your net worth and compare it to January's baseline. The numbers tell a story of progress: a 15% increase in income, a solid 6-month emergency buffer, and a growing investment account, up 10% after contributions. You feel proud and energized. With renewed vigor, you refine your income streams again. You launch a digital product, a templated business growth blueprint priced for passive sales. You spend an afternoon creating compelling landing page copy. Set up an email sequence and schedule targeted social media ads. Sales trickle in around the clock. Each purchase requires 0 additional hours, boosting your earnings and freeing you to focus on higher-level strategy. Months 7 and 8 see your habit. Systems solidify. Earning, saving, investing flow like a well-oiled machine. Increase your automatic transfers. A bit more into savings, a bit more into investments. You also carve out space for continuous learning, reading 1 finance book a month, attending to investment seminars, and joining a mastermind of high-achievers. By month 9, you recognize the multiplier effect. Your digital product, once a small experiment, brings in enough to cover 2 months of personal expenses. Your index funds and dividend stocks generate modest but growing passive income. You decide to reinvest that cash, further accelerating. Compounding month 10 brings an unexpected opportunity, a chance to invest in a colleague's startup at an early stage. You followed their progress, you trust their team, and you have the capital to allocate. You weigh risk versus reward. Consult your financial advisor and commit a small portion. Feel the thrill of being an investor rather than just an entrepreneur. In the final 2 months, you focus on scale and repeatability. You assemble a small back-office team, a virtual assistant to handle admin tasks, and a part-time financial coach to help you optimize tax strategies and investment choices. You design a simple dashboard to track earnings, savings rate, and portfolio value at a glance. Every Sunday evening, you glance at the chart, celebrate gains, spot areas to tweak. On the last day of your year with the wealth equation at the center, you stand back and admire your journey. Map out the 4 pillars: earn, save, invest. Repeat as interlocking gears driving your financial engine. See how each element reinforces the others. Earning more funds, saving more fuels investments. Investing wisely compounds wealth. And the discipline of repeating the cycle unlocks exponential growth. Your metrics are impressive. Your income up by 50%. Your savings account triple what it was. Your investments matured significantly, but deeper still is your transformation. You've built habits that outlast a single year: strategic earning, mindful saving, informed investing, relentless repetition. You've cultivated resilience to weather market swings and made connections that enrich both your professional and personal life. Now, as you set your sights on the next horizon, perhaps real estate acquisitions, equity stakes in high-growth ventures, or launching a foundation, you carry forward the wealth equation as an unshakable framework. You know that true wealth is more than numbers. It's the freedom to choose, the security to innovate, and the legacy you build for those who follow. Stay optimistic, stay disciplined, and remember, each cycle of earn, save, invest, repeat compounds. Not just your bank balance, but your confidence, your impact, and your capacity to dream bigger. The wealth equation isn't a man, it's the blueprint for a life of abundance.